of the headlines recently, but Chinese companies have been busy releasing very powerful AI models of their own. It seems that Lunar New Year, which began on Tuesday, has become China's unofficial launch season. Alibaba kicked things off with RinBrain, a model designed to help robots understand the physical world. They also unveiled Qwen 3.5, a coding and agent-focused model that is up to 5 times faster than its predecessor. Meanwhile, ByteDance dropped Cdance 2.0, a video generation tool, as well as Dubao 2.0, its deep reasoning model. And then Zhipu released GLM-5, which is engineered for agentic intelligence. The through line behind all of these announcements, all of these models are reportedly matching and even beating US competitors on multiple key benchmarks. Okay, here to break down this season of launches, we're speaking with Prof G Media's very own Alice Hahn, co-host of the China Decode podcast. Alice, good to see you.
Hi, Ed, and Happy New Year. Happy Year of the Firehorse.
Happy Year of the Firehorse. That seems to be part of the story here, which is right as the Lunar New Year shows up, we see tons of new models coming out from these Chinese companies, these new AI models, Cdance, Dubao, GLM-5. I mean, a lot of these names are kind of dominating the headlines, at least in China. What do you make of these new AI models that have come out of China? How important are they? What do they mean for consumers and investors?
Well, Ed, it's definitely true that Chinese AI has bolted from the stables, to borrow a horse metaphor. And as you rightly say, we've got a couple of models that have just come out. Zhipu's GLM. We've also got Qwen, the new Qwen 5 Max model that's come out. We've also got new AI video generation models that have taken Hollywood, I think, by huge surprise and shock and consternation. But generally, when I look at the models, and I've been using them in the last few days, what's clear to me is that they have improved. They are faster. They are more cost-effective if you obviously compare them to the closed proprietary models offered by OpenAI as well as by Claude, for instance. But really, my frustration with this debate is that it's apples to oranges. People are going to use the Chinese models differently. I think the fact that Brian Chesky, the Airbnb CEO, says outright a couple months ago that a lot of his engineers are using this for agentic chatbots because it's cheaper and faster seems to suggest that the use cases for this are very different, the Chinese models that is, than the American closed models. Firstly, a lot of engineers and just everyday people are using and experimenting with the Chinese models. Qwen, for instance, they're downloading them locally, fine-tuning them and using them for their particular use cases, any kind of projects that they may be involved in. It's got improved privacy because they're downloading it locally. It's cheaper, often 10 to 20 times cheaper than what's offered by OpenAI and Claude. So really, they're using this very differently from, say, potentially you and me, Ed. I use Claude a lot, the enterprise level, because the reasoning is exceptionally good when it comes to the geopolitical analysis, the financial analysis that I'm involved in. So the way that I think about it is that the American models are really focusing on precision, on reasoning at the highest level as they really quest for AGI. The Chinese models are really figuring out how to create a market in which everyday people, engineers, corporates even, downloading them locally, experimenting, fine-tuning, and just capturing the benefits of cheaper, faster models. So I don't think there's a direct comparison. I think that the market exists for both these models, so to speak, to coexist.
One of the things that we're also seeing is just the benchmarking. I can't tell how seriously I'm supposed to take these benchmarking leaderboards. It seems that things are constantly shifting. But when you look at the leaderboards, when you look at the stats on which is the best model, which is the best performing, the fastest, whatever, however you define best, I'm not sure how they define it. The Chinese models tend to be the best, or at least they tend to be at the top of the rankings. What do you make of that? Does that mean that the Chinese models are better? Does that mean they're going to overtake the American models? Or again, is this perhaps maybe apples to oranges and these benchmarks maybe don't make sense?
Well, I love that you asked that question, Ed. I think often that the benchmarks can be red herrings. There's a Goodharting principle in computer science that is applied to this, which suggests that even although they may meet those benchmark goals and exceed the other models, there are certain unquantifiable goals and performance outcomes that they may still be inferior in certain respects to the Claudes and the OpenAIs of the the world. So again, back to my previous point, I really think that if you care about privacy and cheapness and speed, maybe you go for Quen, you go for Zhipu, you go for Kimi. But if you care about, frontier, cutting edge reasoning, precision, then you are still going to favor the Claudes and the OpenAIs. So it's really different universes that they inhabit. And I think benchmarks can often be red herrings, even although there's incentive for these models to come out and say that we're exceeding the benchmarks of other rivals and competitors. But again, the cost is something that is directly comparable. It's no surprise that the Chinese models are 10, 20 times cheaper. And I think that with cost deflation, inertia will continue to favor the Chinese.
At what point will the cost really change and shift the way the market works here? I mean, consumers, I think they know about OpenAI. They're beginning to know about Anthropic and learning about Claude. So there's maybe some brand loyalty there. But I feel like at a certain point, if you're presented with an option that is 10 or 20 times cheaper, you go with that option. So I guess what I'm a little confused about is, when is that going to happen? Is that not going to happen? Is that not a giant concern for a company like OpenAI or Anthropic or even Google with Gemini? Yeah,
but I do think when we look at technology diffusion and value creation, the way that the software economy really came out of the US and the US dominated that, and the value created by software, it's really, I think, going to be the Claudes and the OpenAIs that benefit from the enterprise part of the value chain. The enterprise can pay for it, and they tend to be stickier in terms of the subscription. So I think that we'll end up in a world in which maybe the majority of the value is captured by Anthropic, by OpenAI, but that doesn't mean that there won't be anything left on the table for Alibaba, for ByteDance, for Kimi. It's just a different market that they're inhabiting. And we haven't even talked about some of the other use cases. There's now Chinese AI chatbot toys. That is going to be a big market, I think. And certainly it marries well with China's manufacturing and hardware capabilities.
So they're toys?
Toys, yeah. They're these toys that are being sold that can speak directly to children and teach them and interact with them. I don't know if you've ever read Neil Stephenson's Diamond Age, but it's this kind of AI primer that is part of this story. We're already living in that Diamond Age, so to speak, in this sci-fi realm. That is one area. And then another area in which I would say OpenAI and Anthropic have not been as competitive is in multi-language. If you look at the models coming out of China, it makes sense because they've been trained a lot on multi-language, English, Chinese, and other language data sets. They tend to be better at other languages. And so if you're a global company where you care about a Chinese, Asian speaking market, that could also be quite an important distinction.
One name we haven't mentioned, which was very popular about a year ago, seems to be less popular today, is DeepSeek. Where does DeepSeek sit in all of this?
Well, I think DeepSeek is still a leader. They still have a lot of the high-level AI talent, and that counts a lot when you think about the AI competition domestically and globally. I do know for a fact, although I'm not sure if I should say this, that DeepSeek is working a lot with local governments, with government bodies in China to integrate AI into local public governance. And I think this is coming at a time where, Ed, we'll be watching with bated breath in the next 2 weeks or so, because the 15th five-year plan is going to come out, and it's very, very clear now that AI plus is going to be a huge cornerstone of the policy for the next 5 years. So AI in every realm, including in public governance and public service and utilities. So DeepSeek is still a player, but I think the latest models coming out of Alibaba, even Kimi, show us that in China, at least, the AI race is hyper competitive. It's not just a duopoly, or even centered around 3 players, which is increasingly what's happening, it seems, in the US. There's many different players, and I think they can capture different parts of the market.
All right. Alice Hahn, co-host of the China, and some countries are weighing new methods to push back. For Sweden, that means reconsidering its use of the krona as its currency and switching to the euro. The country's finance minister just backed a formal inquiry into euro adoption, which would strengthen the country's trade ties to the EU. A full embrace of the EU's common currency would also be a vote of confidence in the euro, just as the dollar's dominance has fallen into question. In the past year, the euro has climbed 13%. Meanwhile, the dollar has declined 9%. Okay, for more on what Sweden's currency plans mean for the dollar and also for the US, we're speaking with Robin Brooks, Senior Fellow at the Brookings Institution and former Chief FX Strategist at Goldman Sachs. Robin, thank you for joining us on Prof G Markets.
Yeah, my pleasure. Thanks for having me.
So this decision, or we haven't reached a decision, but at least Sweden appears to be mulling over the prospect of ditching the krona, which they've had for years, and moving over to the euro. It appears that this kind of has to do with the relationship between the US and Europe, or at least global uncertainty. This seems to be somewhat a response to that. Take us through why this is happening. Why is Sweden considering this?
So, as you know, a bunch of European countries got together back in the 90s and they decided to form a common currency. The euro began in 1999. There were a bunch of countries that did not join the euro when it was created. The UK, where I'm guessing you have a little bit of a connection. And then Sweden, obviously, Denmark, Poland, Czech Republic, Hungary. So it's not, first of all, any kind of outlier status to not be in the euro. Countries at the time had referenda on whether joining the euro was a good idea. Sweden did one in 2003, and it was rejected by a margin of 56% of the vote was against joining the euro. The margin in terms of popular opinion polls now has moved in the direction of joining the euro. You're totally right about that. That's mostly about geopolitics. So a fear that, in particular, Russia's invasion of Ukraine just makes the world less safe. The US is less of a predictable ally. And so it must be that some Swedes think joining the euro gives you that extra safety. If that is what's going on, then I think that's poor reasoning, because the euro is really just a system of currency pegs. It doesn't confer any kind of safety. You just have to ask the Baltic states, for example, Estonia, Latvia, Lithuania, do they feel any safer from Russian invasion because they're members of the euro? No. Poland, the finance minister just said, we think the euro is a great idea, but we prefer to be on the outside than on the inside. So I think whether or not, from a geopolitical point of view, this is a smart decision, I think is totally up in the air.
It sounds like dumping the krona, taking the euro would mostly be a symbolic gesture to say we stand with Europe, and that it wouldn't really have much impact, or whatever impact it would have would maybe not even be good for Sweden. Is there an element of de-dollarization or debasement in this whole conversation? I mean, one of the big themes we've been exploring recently is the fact that increasingly people are wary of the dollar. They're concerned about debt levels in the US. They're turning to things like gold. And I just wonder if the euro, as the next most popular currency, if there's an argument to be made that we should be transacting in euros. Maybe people in Sweden think that that's the reason why you switch over to the euro. Is taking on the dollar a part of this conversation at all, or is that also a red herring?
First of all, I think you're asking exactly the right question. There's a survey of central bank reserve managers. So these are, picture all the sovereign wealth funds in Asia, all the central banks that have piled up tons of dollars and other foreign exchange reserves. These guys manage trillions of dollars. And this survey is done by the IMF. It's once a quarter, and it surveys what is your allocation of your reserves to dollars versus euros versus Swiss franc versus Swedish krona, etc. The amazing thing is that with all the noise last year, just think back to Liberation Day, the big drop in the dollar in April 2025, as we went through the year, the altercations that President Trump had with the Fed, the massive rise in gold prices that we saw after October in particular, the allocations that foreign reserve managers are making to the dollar have been totally stable. There has been no flight from the dollar. There's also been no flight into the euro. That's pretty remarkable when you think about all the noise that we've had. So I think the lesson that I draw from that is the hurdle for the dollar to lose reserve currency status, for there to be serious dollar debasement, it's pretty high. But again, for Sweden, this is a really big opportunity. Sweden traditionally has always been considered kind of a high beta currency. It's super volatile. You didn't really want to hold it because it banged around all over the place on news. Most recently, so over the course of the last 6-9 months, the Swedish krona has started trading like the Swiss franc, so like a safe haven currency. So when global uncertainty goes up, for example, Liberation Day tariffs, Swedish krona actually does well. So I would put the Swedish krona in the same bucket as gold, silver, platinum, you name it. It is this safe asset. What exactly is going on with dollar debasement, I think, is a separate question. Incidentally, the dollar is up today because the FOMC minutes talked about hikes, and that surprised the market. So I think there's clearly a flight to safety. What exactly people are fleeing from isn't quite clear yet.
It's interesting because foreign exchange currencies, these are conversations that are typically in the purview of investors, Wall Street, think tanks, economists, etc. But the de-dollarization question has generated a lot of heat, and a lot of people are interested in it. And I think because it communicates a possibility that this world order that we've all known and lived with for so many years, that where the US is the dominant power, there is a hegemony of America, it's reflected in the strength of this currency, that may be coming to an end. And I would add, a lot of investors are making trades off of this macro possibility, which is why we're seeing what we're seeing with gold. But it sounds like you, as a real currency expert, as the chief FX strategist, former chief FX strategist at Goldman, it sounds like your view is that maybe this is a little bit overdone. If you're actually looking at the global reserves of the dollar, that actually this is more kind of bulk than bite.
Well, I mean, we know that in the United States, fiscal policy is kind of out of control. Debt is on a trajectory that is not good at all. Deficits are out of control. The thing is, that's true for many other countries too. Everyone is in trouble on fiscal. And so in a relative sense, the United States is worrying, but relatively speaking, it doesn't look that bad. So when you look at, for example, risk premium in the bond market on treasuries over other comparably measured government bonds in other countries, actually the United States smells like roses. It sounds crazy. So I think where we are is that there's a debasement trade, for sure. It's just not clear whether that debasement trade is against the dollar or against all fiat currencies together.
Yeah, I think the question I always return to is, sure, maybe it's bad. What's your alternative?
Exactly.
Is it the euro? Is it the yuan? Is it Bitcoin, which is also kind of bad as a form of currency? Is it actually gold? These are all very interesting questions. We are out of time, but thank you for joining us. Robin Brooks, unpack that story a little bit, because I think it tells you a lot about where we are in this AI moment. So just to refresh your memory, one of Anthropic's biggest customers is the Defense Department, which is paying hundreds of millions of dollars to use their AI tools. But as of this week, Secretary Hegseth has threatened to cut ties with Anthropic. He has even gone so far as to put them on the supply chain risk list, which is a label that is usually reserved for foreign adversaries. They're also threatening to cut ties with any company that does any business with Anthropic at all. In sum, Anthropic is now on the administration's shit list. They do not like them. Question is, Why? Well, it all centers around two main disagreements. Number one, Anthropic has told the Pentagon that they do not want their technology to be used for autonomous lethal weapons, i.e. robots that kill people. And then number two, they also don't want their technology to be used for domestic mass surveillance, i.e. spying on American citizens. And according to the Defense Department, this is a deal breaker. In fact, such a deal breaker that they now view Anthropic as a potential risk to America. So there's a lot that is concerning about this. The fact that we're now requiring that AI be used for things like drone strikes, also that we're requiring that AI be used to spy on Americans and surveil them. These facts are scary in and of themselves. But what is perhaps more striking is the hypocrisy here. The fact that this is coming from an administration that has long stated that this is exactly the kind of thing we need to avoid, the threat of government surveillance, of big tech surveillance. Trump himself said that one of the goals of the campaign was to, quote, monitor our intelligence agencies to ensure they are not spying on our citizens. Jim Jordan warned of the, quote, collusion of big tech and big government. J.D. Vance, the vice president, cautioned about companies, quote, using artificial intelligence to surveil Americans. He said, I worry about invasions of privacy. So this is exactly the thing that MAGA was supposed to prevent. This collaboration between the government or the deep state and also with technology companies to surveil the American people. And now we find ourselves in this very ironic position where an AI company actually doesn't want to move in that direction. They don't want to surveil citizens. They're down to work with the government, but they're not down to spy on Americans. And for that, they are being punished. Now, we can dwell on the hypocrisy here. It is quite striking, but that might also be missing the point. I think the larger point is we now know where this is all headed. And that is despite the virtue signaling, arguably from both sides, about the need to rein in big tech, to reduce the surveilling powers of the largest corporations and of the government, I think it is pretty clear now that is not going to happen. AI will be used for weaponry. AI will be used for autonomous lethal drones and operations. AI will be used to track Americans, to spy on Americans, to surveil Americans. This is simply where we're headed now. And I should also be pretty clear here, most other companies aside from Anthropic are on board for this. Companies like OpenAI, companies like xAI, Google, and of course, Palantir, they are all down. Now, the only thing that might get in the way here is the same thing that I wrote about in my newsletter this week, and that is the American people. As I've written, AI is becoming increasingly unpopular. Less than half of Americans say they like AI. Less than a third of Americans say they trust AI. And it could be that this is the straw that breaks the camel's back, that voters decide, actually, we don't like this direction. We don't want this technology. We don't like how it's being used. And therefore, we're going to do something about it. We're going to vote you out. That could happen. And I think the political ramifications of AI is now something that investors need to take really seriously. We can't really ignore it. Having said that, there are still many Americans that don't really know about AI, that perhaps don't really care about AI. And so until this reaches a boiling point, I do think that the current trajectory is the most likely. That AI will become fused with government. It will enable a surveillance state. It will be used to track people, target people, and sometimes kill people. Everything that MAGA said that they were supposed to prevent, ultimately, that will transpire. That is where the trend is moving. And barring some... It should be counting sheep, not pigs, right?
Right. But that's the point, that when I'm talking about my sexual partners, I start counting them, and I'm counting sheep, Ed.
I got it, but we're talking about pigs here, no?
Yeah, I couldn't find a good pig joke. Yeah, I was accused of performing acts of bestiality at the London Zoo, and supposedly they saw me trying to escape while getting into a jaguar. That's better. We should have led with that one.
Testing the material.
How are you, Ed? What's going on?
What is going on? Doing some more speaking stuff. Spoke at Aspen Ideas Festival, New Jersey, which is a spin-off of the real Aspen Ideas Festival.
I'm sorry, the Ideas Festival, New Jersey?
That's right.
Wow, I think that's probably the weakest flex you've ever made. Hey, I spoke at the Ideas Festival in New Jersey.
In New Jersey. And then the other side note is that I didn't realize this. There was the main room, and I didn't realize while I was speaking, Mark Zandi, who is of course our big guest, he was in the main room, and I was off in the side room with Kyla Scanlon. So
the first time I spoke at South by Southwest, I looked at the schedule, and of course, they scheduled at the same time Al Gore, and this is back when anyone cared about the environment.
Speak for yourself.
Oh, that's right. You're young. I'm old. I don't care. I'm going to be dead by the time we all have to engage in mass migration and super fires. And they put me in a room that held like 1,400 people, and I'm not exaggerating. I think 18 people showed up, and like 9 of them were from Vox. It was so humiliating. I'm like, should we bother? Should we just go get drinks at this point? When did you do this, Ed? And what was your topic?
We talked about the casino economy, specifically Gen Z's perspective on all of this. And it was me and Kyla Scanlon. We keep on doing events together. We did a...
Really? You guys are the voice of Gen Z, you and Kyla.
Exactly. We're sort of the double header. Been on TV together a couple of times. She's great. But yeah, we spoke about Gen Z. We spoke about the casino economy.
And what is the casino economy?
The gambling and the options trading and the sports betting, etc., and the crypto.
Do you do any gambling or buy options, which is essentially gambling? Like, do you have any sort of a gambling bug?
No, I don't. I've never been interested in gambling.
Really?
Strangely, yeah. And I have a lot of friends who love gambling. They love sports betting. They find it fascinating. They find it fun. I've never been interested in it. I've never found it fun. So I guess I'm kind of lucky in that regard because most of them lose money.
Trying to find like what you're one of those guys. You're like a Stepford wife. Like I want to stab you with a fork to see if like wires come out, because everything I've learned about you so far, you are remarkably like well balanced and stable and have a good relationship with your parents, and you're very humble, and you're living with a woman, and you seem to have a nice relationship, and I just don't buy it. Something's going on here. We're going to find out. You're like
having sex with jaguars,
going to kids' birthdays parties dressed up as a clown and then taking them home and like killing them and eating them.
I'm the Ed Gein of financial markets.
Yeah, something's going on here. We're definitely, I don't know what it is.
No, but it's fair. I mean, I like partying, I like drinking, but gambling has never been a vice that I've been interested in. I'm really not sure why.
I don't think I've ever really seen you drink. People don't like to drink around me. People don't like to drink around their boss. They think they're going to get in trouble.
What are you up to? This is one of the first times we've talked a bit more about me than we have you.
It feels alien, doesn't it? I'm in London, where it's starting to get cold and dark, and I started to realize I'm really excited to get back to America. So the countdown has already started. And I went to a dinner last night, and I met the general manager. Is that what they call the coach of Arsenal? He's like a lovely guy.
You met Mikel Arteta?
Yeah, I met him.
You met Mikel Arteta last night at dinner?
I did, yeah. I think I've peaked. It's time for me to leave London, right?
Just so we're clear, that's the coolest flex you've said on the podcast probably of the year, at least in my book. Mikel Arteta is that's awesome.
Well, his kids go to the same school as my kids, and he and his wife are really lovely.
He's a good-looking guy too, right?
Oh my God, he's dreamy. He would start talking, and he's
sort of the heartthrob of England right now.
And he has this Spanish accent, and you're like, what? I see his lips moving, but I can't focus on what he's saying. He's so good looking. He's very dreamy. He's like a James Bond kind of looking guy.
And he's an incredible manager. He studied under Pep Guardiola. For his age.
Is he the most successful person in the Prem right now? They don't get trophies, but they're always at the top.
Yes, they're top of the table.
Always at the top of the table.
And he turned around a mediocre team and turned them into a world-class team. That's amazing. So you had a conversation with him? Did he know who you were?
Well, of course he did. That's why he came. He wanted a chance to meet a professor. No, he had no idea who he was, but he's very friendly. And I asked him, I said, what's it like now? He was a player for 17 years or something. And then he went right into coaching. And I said, what's it like? What are the young people like today versus, because they're all young men. What are the players like today versus when you were playing? And he said, it's a much more chaotic environment now. There's the money, the fame, the social media. It's like constantly, there's no rest and no break for them. And I could kind of see that. It's so competitive and their careers are so short-lived. And the difference between making the league minimum of whatever it is, 150,000 pounds, and making 30 million is not that great. It's like when you get to those levels, it's like the best golfers in the world are on average score, 0.4 strokes less than the guys who never get their PGA card. So, what this is all a way of saying, I need you just to make a little bit more effort in this podcast. I need you just to go that extra mile. Yeah. I like what you're wearing today. You look very stylish. We're clearly paying you too much. What are you wearing? Let's do a shout out. What are you wearing? I'll tell you what I'm wearing today. I'm wearing Brunello Cucinelli, which makes me feel 59 again. And then I'm wearing Viore pants because A, they're a sponsor, and B, this douchewear athleisure is so comfortable. I'm turning into a doctor's housewife. I'm on my way to do Pilates.
Pilates and Brunello. That sounds good. Well, they should be really sponsoring us if you're going to give a shout out. This is Drake's, and again, they should sponsor us as well, which is an English brand that you'd probably love.
Yeah, it's very handsome on you. Well done.
Thank you very much. Okay, shall we talk business?
Sure.
The top open source AI models used to be American. Now that is changing. Today, the top 5 open source AI models are all Chinese. And that is not the only story of AI evolution coming out of China. Chinese companies are also showing that they can do more with less. DeepSeek is using a new format that has allowed their training models to run 30% faster. Meanwhile, Alibaba last week said that its new computing pooling system cut the number of GPUs needed to run its AI models by 82%. So this is quite significant, Scott, following the conversation we had last week about how we're seeing all of this data center demand, and we don't really have enough energy to power the data centers. Energy costs where data centers are being built have tripled. And as a reminder, if you want to build AI, you need to build the data center that powers the AI. OpenAI wants to build a chip network that would consume 250 gigawatts of energy, which is equivalent to a quarter of America's entire grid capacity. Point being, a lot of AI and not enough energy to power the AI. And then we ask this question, okay, well, then maybe we need to figure out a way to either get more energy through solar or nuclear or perhaps drill, baby, drill, or you figure out a way to make the AI models more efficient. You figure out how to consume less power, how to do more with less. And it appears that China is making some headway on that front. Alibaba, just last week, announcing this new system. It cuts their GPU usage by 82%. Basically, they can use 200 GPU chips and they'll perform at the same level of 1,200 GPU chips. Don't ask me why or how they can do that, but that is what they're saying. And it appears that this may be a trend in China. So, Scott, your initial reactions to China winning the efficiency race, or so it appears.
I was thinking in the editorial call yesterday when we were going over the stories, I kind of got my mind blown thinking about, as I heard you guys talk about AI and the energy requirements and open source / open weight models. And I got this, what I think is this, I don't want to call it a revelation, but something that I thought was really exciting. And I thought, wow, maybe we do see something here in the matrix. And that is, while everyone's talking about the gating factor is going to be energy and that there's no way that there'll be enough nuclear power coming online to quench the thirst of Sam Altman's unbelievable juggernaut called OpenAI. And I thought, well, maybe he's just trying to manifest it in these big energy projections that are running up the stocks of electric companies and scaring everyone that we're not going to have enough power. I wonder if, well, innovation can come from the other side, and that is people can start producing chips and LLMs that just require dramatically less energy. And then the other thing that sort of blew my mind, and now I think as I thought about it and slept on it, I think it's actually a pretty decent thesis, is that if you look at the U.S. economy, it's run for profits and shareholder value. The life in America is so much better if you're wealthy than if you're middle class, and your life in the middle class is so much better than if you're in a low-income household, that we make a series of incremental justifications every day where it's all about, America's now all about the shit you have, or specifically your ability to buy more shit. Our economy and our society is run for profit. The Chinese economy is run for control and also long-term geopolitical power. They make 50 and 100-year plans, which we would never have the ability to do. And part of that is because we pay the price for having governments, democracies that turn over and sometimes go zig and zag. But what I think is going on, or what I think is going to happen, is the following. China is really fed up and sees America as their enemy, or is sick of America having this sclerotic trade policy that is really damaging them, and then saying you can't have our chips. And they've said, okay, we've had it with these guys. So what do? They're much more strategic. And quite frankly, Xi is 10 times smarter than Trump, and also has this incredible weapon, in that he's willing to kind of think middle and, think kind of medium and long term, which Trump has absolutely no ability to do. And I think what they've decided to do is the following. I think they are going to flood the market with cheap, open weight models, AI models. And if I were advising Xi and I said, okay, if you think of America as an adversary or America, essentially America has become a giant bet on AI. Specifically, 40% of their entire market is from the valuations, the exceptional valuations of 10 companies directly related or related adjacent to AI. And if those 10 companies go down 50, 70, 90% like they did in the dot-com era, they are in a global recession. Trump is out of vogue. We don't even need to stop buying soybeans. They're in a world of fucking hurt. How can we do that? Pretty easy. Let's start pumping out a bunch of models that require less electricity, less power, less processing power, and are 90% as good. And another personal anecdote, my first strategy client, I started a strategy firm called Prof when I was 26. And my first client was The Gap. And they wanted a new brand. And we came up with, working with this really intelligent guy named Mark Bucko, who was the head of strategy there at the time. We came up with what I thought and ended up being a great strategy. And that was, I just read Peter Drucker's book, and he said every major business shift in society is largely reverse engineered to a demographic shift. And as someone who had personal experience with this, I said, one of the biggest demographic shifts in America, and this is 1993, is the explosion in single-parent homes. And it's almost, when we say single parent, we mean a single mother. And single mothers, we did some research in some focus groups, are very cognizant, self-conscious, and focused on dressing their kids well, because they're insecure and self-conscious about the fact they don't have as much money and the dad isn't around, and they want the kid to feel good about themselves. And so we identified this segment, and it was this fast-growing segment, and we said, okay, here's the positioning. 80% of the gap for 50% of the price. And that positioning took Old Navy from $0 to $1 billion faster than any retailer in history. And that is probably, if you look at the fastest growing businesses in the world, oftentimes they're that 80% of the biggest airlines, America, Delta, and United, for 50% of the cost. That's Southwest, now the most valuable, or was the most valuable domestic airline. I think that the Chinese tech sector, under the direction and encouragement of the CCP, is about to Old Navy the shit out of the U.S. economy. And they've done it across BYD, electric vehicles. That's their business strategy, whether it's cell phone towers or clothes. But I think they are going to spend a ton of money and time and put their most talented scientists, of which there are a ton, to work on the following. Let's fucking go. We've been going for the heart and lungs after red states with these trade policies, whether it's rare earth minerals or canceling our contracts for soybeans. Now let's go for the fucking jugular, and let's neuter their AI industry, specifically the valuations, and let's release a ton of near premier quality LLMs, open weight, that anyone can use for near free, that maybe requires much energy, but most likely don't, and certainly aren't nearly as expensive. And let's fuck with America's big bet here. Let's make this big bet not pay off.
I think that is exactly what is happening. I would add that part of the reason why this has happened is because of the export controls that we put on chips to China. And this was the DeepSeek story that we discussed at the beginning of the year, where China had less capable and fewer chips to work with because of these export restrictions. And it forced them to get leaner and more efficient and work with what they had. That is exactly what they've done. And I think, to your point, they are doubling down on that. And I'm just going to go through some of the data that we've seen on how China is winning in this AI efficiency game. So I just talked about Alibaba and their AI model, which is called Qwen. They're using 82% less GPU chips because they figured out this system that helps them do that. Again, as I said, I don't know exactly how that system works, but that's what they've told us. DeepSeek, they are also optimizing for efficiency. They're using this thing called the FP8 format, which essentially just cuts down the number of the decimal count on all of these long numbers that go into these models, which allows them to reduce the amount of usage of memory, and it allows them to run their training models a lot faster. GLM is a model that is produced by this other Chinese AI company called ZAI. They are also using a lot less energy, and all of these efficiencies are being reflected in the costs of these models. So just to go through the costs here, the cost per million tokens, if you're using OpenAI's model, which is GPT-5, the cost per million tokens is $10. Compare that to ZAI's model, which is called the GLM 4.6 model. The cost is $1.75. For Alibaba's model, Qwen Plus, it is $1.20. For DeepSeek, it is $1.10. Put another way, all of these Chinese models are nearly 10 times cheaper than their equivalents in the US. Now, I'm sure the US models are better, and we'd want an AI engineer to come on and confirm that to us. But what is clear is that they are putting exactly, as you say, the old Navy strategy, 80% of the value or the quality or whatever you said for not 50% of the price, but for 10% of the price. So they are doing to AI the same thing that they did to electronics, the same thing that they did to apparel, the same thing they did to consumer goods. It's the same thing again. It is reduce the costs dramatically, and at the same time, and sort of upstream of that, reduce the amount of energy required to create these models dramatically. And they seem to be way ahead of the ball on this. And I do agree with your point that this could be it could gut the American economy, which, as you say, has become incredibly reliant on AI. Now, I want to go through in a second just the history of efficiency in the business world, but I will pause there and see if you have any reactions to those numbers.
So earlier in the year, we predicted that the rivers of capital into the U.S. were going to reverse flow. That was mostly sort of right, and that is EU stocks have done really well. But also, to be fair, American stocks are up 12, 13%. The S&P is up. So clearly there's still massive flows of capital into the U.S. The most dangerous own goal over the medium and long term is there really has been a chill placed on the inbound rivers of human capital, the inflow. And that is some schools, some colleges are projecting there's going to be 20 to 40% fewer foreign applications. Every talented PhD student and every world-class researcher in the world had one thing in common. They had either come through U.S. universities, been trained here, or would seriously consider coming to work for our universities. And now what's happened? China's figured this out. China produces 120,000 PhDs every year. That's 3 times what the U.S. produces. In 2024, China's AI research publications, the output, the amount of peer-reviewed credible research matched the combined output of the U.S., U.K., and European Union, and now commands more than 40% of global citation attention. And AI, which, let's be honest, is very IP and research heavy, technical heavy, they've got more coal in the furnace, and they're going to use it strategically to reach that type of scale that you're about to talk about. Talk about the importance of scale in our winners.
What I would describe is versus scale is the importance of efficiency. And if you look back through basically every great company in history and what they were good at and where they innovated, they all basically have one thing in common, and that is they were all incredibly innovative when it came to cutting down costs. And we can go back as far as the invention of the car. I mean, you look at Ford as a great example. Their great innovation was the conveyor belt, the assembly line. And they basically, what they did was revolutionize how you make a car. And what used to take 12 and a half hours of manual labor, they were able to reduce it to just 90 minutes. And because of that, in less than a decade, Ford cut the price of cars in half. And then a decade later, they cut the price of cars in half again, to the point where by the 20s, more than 1 in 2 cars in the world was a Ford. That's how they did it. They just innovated on, let's make it more efficient to build this thing, not let's make the coolest and sexiest and fastest car in the world. McDonald's, same thing. They reinvented the kitchen assembly line. They reduced the menu to just a few items. They cut the cost of the hamburger in half. They became the biggest restaurant chain in the world. IKEA, another great example. Their big innovation was just how you ship the products. Let's put them in flat, small packages. They shrunk the size of the box by 50%, which cut the logistics costs almost in half. And they can now ship 10 times more furniture than their competitors for the same amount of gas. Now it's the largest furniture retailer in the world. Walmart, another good example too. Cutting down logistics costs so they can sell products cheaper than their rivals. SpaceX, a newer example. Their big innovation, let's just reuse the rocket. Let's make it cheaper and more energy efficient to do this. And they cut the cost of launching stuff into space by more than 95%. And as we've discussed, now they have 90% of the space launch market. So I think when we look through history, the most impactful companies, the companies that achieve the most amount of significance and dominance and revenue, it's the companies that figure out a way, how can we do more with less? And I think that is the big question that America now needs to ask itself, especially when we look over what's happening in China, where China is laser focused on addressing this problem. And I think if you look through history, what you would assume is that they're going to win on AI if they figure that out before we do.
So there's this great economist at Stern named Bruce Buchanan, and he absolutely blew my mind and gave me a model that through which I run almost every strategy and every decision I make economically or in terms of positioning a company. And that is all shareholder value, all stakeholder value is a function of the relationship between 3 lines. At the very top, perceived value. In the middle, the price you're charging, and the bottom line is the cost to produce that product. And companies can only increase stakeholder value by doing one of 2 things. They either push down the cost line, right, through scale. That's what we're talking about now. Hamburgers for less money, putting satellites into space, payload into space at a lower cost per kilogram, assembling a computer for less than anyone else, Dell, right? And then once you push that line down, you can pass on the savings as Walmart does and immediately lower the price concurrently. And that creates a gap between the price you're charging and the perceived value, which is greater, which should result in more market share, which is how these companies have created hundreds of billions of shareholder value. It's like, oh my God. So the old ad that was most effective for Walmart was if you start shopping at Walmart, it's like getting a promotion. And that is your quality of life. You're not going to have to buy Budweiser. You can buy Heineken. You can now buy steaks instead of hamburger. It's like you got promoted because of that scale, because we're able to lower our costs. We're immediately going to pass it on lower prices, and the margin, if you will, of perceived value relative to price is greater, more market share. The flip side, and what actually America is, I would argue, better at, is taking the top line of perceived value and pushing it up through branding, through merchandising. Loosely speaking, or very reductively, China wins by pushing the bottom line down, scale, and passing along those price advantages to their customer. And America, generally speaking, has value-add products through advertising, strategy, distribution, whatever it might be. Scarcity or artisanship pushes the perceived value line up.
I mean, OpenAI appears to be the king of the perceived value in the AI space. I mean, we keep on seeing these benchmarks, and in a lot of cases, different models are actually beating GPT when it comes to reasoning and speed, all these things. And yet OpenAI is the premier brand in AI. And I wonder if that is a function of, as you say, maybe they are really good at doing the stuff that Apple's really good at, which is the branding and pushing up the perceived value. But I wonder if when you're talking about gigantic revolutionary technologies that expand beyond just retail. Something like this, something like AI, which is supposed to take our entire economy, the global economy, into an entirely different direction, whether it is imprudent of America to spend their time on perceived value versus figuring out, okay, how can we deliver this to the most amount of people for the least amount of money possible? That to me seems like the right direction to go with when it comes to AI, especially if this is going to be as transformative as they say it is.
It's an interesting question, but traditionally, the American economy has been about value add as opposed to scale. The Chinese, so think of value add as synonymous with brand value. Name a global brand that's come out of the second largest economy, China.
It's tough.
Isn't that weird? Think about it. There's great French brands. Louis Vuitton.
BYD, I think, is probably the sexiest brand coming out of China right now.
We hadn't heard about that till 24 months ago. Some people say TikTok, some people say Alibaba, but America probably has whether it's Coca-Cola or Harvard, America has like hundreds of amazing. We're really good at media. We're really good at creating value add at the end of the day. Our consultants are the most expensive in the world. Right? Our schools are the most expensive in the world. The digital world, I think to your point, has become more about scale, and OpenAI was first zero to kind of, whatever, zero to 1 million users in like 5 hours or something, whereas other technologies have taken months, if not years, 0 to 10 billion in revenues faster than anybody else. So these digital products that are frictionless, I agree with you, it's more about scale, but generally speaking, American products are usually considered globally the premium product at a higher price and greater margin.
Just to put a button on this, where do you stand on the US-China AI race? I mean, China is winning on energy capacity and energy build-out. They're also winning on efficiency. We are probably winning on quality and in some cases scale. And brand value. We do have some progress on efficiency. Google's developing these alternatives to the GPU called the TPU. I think you're going to hear a lot about this TPU over the next few months, and they are more energy efficient. They just had this deal with Anthropic. Amazon is working on their Trainian chips, which are supposedly more efficient as well. We're getting there, but I think it's safe to say China's winning on efficiency and they're winning on energy. So given that, where do you stand on the race? What's going to happen, do you think?
My emotional reaction is China's going to beat us because I think Donald Trump's policies are just incredibly sclerotic and short-term and just head up your assery like nothing before. The biggest own goals in history have been committed, in my view. Having said that, I have a tendency, and I think we have a tendency, to overestimate the policies of a current administration relative to the underlying economy, which just churns on. And the U.S. economy, biggest gears in the world to grind on more. It's like, have you seen those TikTok videos of those things that crush metal? Like you put a car into the thing and it starts like eating it alive like it's a tomato. I mean, it barely even feels it. It's like, oh my God, watch this. What it can do. I mean, it can just eat anything. That's like the U.S. economy. The U.S. economy just appears to be so resilient and so powering on. So my answer would be, okay, does China win with scale and low cost, or does America win in AI with value add? I think the answer is yes, and that is, if you want to order a puffy winter jacket, it's going to be hard to get something for less than if you get it from Shein or another company that has manufacturing in Southeast Asia. At the same time, people are still going to love North Face. The existential threat here is a function of our valuations, and we've been saying this forever, that the cloud cover for the Trump administration right now and the cold comfort that people have in terms of confidence to spend more money, especially the wealthy, who the top 10% now account for 50% of the consumer spending, which is basically the economy's resting on the top 10%. The top 10%'s consumer confidence comes from where the stock market is. And the stock market is up solely because of 10 companies, 77% of that growth. So they don't need to win. All they need to do is show that these companies aren't going to dominate the world. Built into these valuations is an assumption that these 10 companies are going to own all of it. All of it. And so if they still have the niche products, still amazing businesses, still get premium margin because people want to say I'm on ChatGPT or Claude. I don't want to be on DeepSeek. I don't want to be on, it's not great self-expressive benefit. Or if you're an American company, there might be security concerns. Fine. But all they need to do is say, we're eating into their share. So I don't think there's a winner and a loser here. What I think is both will find their niches, if you will, or both will find a market. The problem is that these companies get cut in half and the stock market goes way down. And when it becomes clear these companies aren't going to have
far more troubling crimes in the US, we've seen several high-profile murders in the last year. Political commentator Charlie Kirk was assassinated in September. Over the summer, Minnesota state lawmaker Melissa Hortman and her husband were murdered in their home. And late last year, United Healthcare CEO Brian Thompson was murdered just before the company's annual investor conference. So these incidents raise questions about how institutions, individuals, and even private companies can address safety concerns. As a result, one sector in particular has seen growing investment, and that is private security. So, Scott, we have been talking about this for a while, and we've been bringing up the possibility that in a less structurally sound society that is ailed with issues mostly to do with income inequality, that leads to more crime, that leads to more violence, which in turn leads to a need and demand for security. Now, I just want to go through a couple of statistics here. One, this comes from Goldman Sachs, which surveyed a bunch of companies, public companies, private companies, nonprofit companies. And basically they found that 3 years ago, 17% of CEOs of the companies surveyed, 17% had private security. As of last year, that number had risen to 27%. So it went from 17% to basically a third in 2 years. A third of companies in America are hiring private security professionals to protect the lives and the safety of CEOs. We've also seen residential security demand skyrocketing. Demand for residential security rose 20% last year. Also, after the United Health CEO shooting, there's this security company, a big company called Allied Universal, and they said that their executive travel protection business grew by 300%. So it quadrupled right after this. So we are seeing a lot of demand for security, for private security, and you actually called this right after the shooting in December.
I would imagine the first reaction is we need to keep our executives safe. Those numbers that you quoted around CEO security are about to explode. That's a good business to be in right now, offering executive security.
That is exactly what we're seeing. And we're seeing more and more high-profile crime, specifically attacking high-profile individuals or high-profile institutions. Scott, your reactions?
I just went to one of these Master of the Universe conferences where, I don't know, probably 12 of the 30 wealthiest people in the world were there, and there was just security everywhere. And it's a real shame. And I think these people can't just take a walk. And something that always struck me is my father said to me, he said, the key to happiness is to be rich and anonymous. And that always struck me as very insightful. Because he said famous people who are rich and famous, eventually there's an industrial incentive to go after them and tear them down, or that they become targets, or they get sued more easily. He said, you want to be rich and anonymous. And I said, how about if I'm famous and not rich? Anyways.
That's what we're going for on this podcast.
Someone once said to me, oh, your son's so smart, he'll probably be famous. I'm like, as long as he's not infamous. But look, when you have guns everywhere, when you have income inequality, when you have people who can go down rabbit holes and get radicalized and go after famous people because they think in some sort of historic act of violence, they're going to regain social capital among a group of people that they think they've lost capital with, and they suffer from mental illness and, guns everywhere. What I'd be interested in knowing, it's like, okay, there's a market show. How do you make money? Are there public companies or places you can invest that make the supplies of the materials for security, right? I got to think home security and things like that are just gonna boom, because the number of wealthy people, just on a lighter note, when I was in Ibiza this summer, I saw a friend of mine and he had a table up front and he had these two enormous security guards. And I said to him, I'm like, dude, you're not that famous. You don't need security. It's like, no. He's like, it's a chick magnet. It means I'm really important. And I'm like, let me get this. You're doing this for women? He's like, yeah, it's amazing. He's like, everybody thinks I'm super famous. And he goes, but next year, he's like the gangster move. I'm like, could these dudes be any bigger? And he's like, no. This guy's really funny. He's like, the new gangster security is to have a hot Israeli woman who worked in the Mossad. And she just has kind of this resting bitch face. and I'm like, oh my God. So could you be any douchier? You're walking around with huge guys right now, but next year you got to find an Israeli security woman because that's the new flex.
This guy would like pay to be on the Epstein list.
Yeah, this guy. That's funny. Pay to be on the Epstein list. That's funny. I got to tell him that. I'm going to text him that. That's funny.
I want to hear more about this Master of the Universe conference you went to and all of the security that was there. I assume there are a bunch of tech billionaires in this room, and you're saying that you saw more security than you've ever seen. Is that right?
It's a strange kind of security, though. There's no metal detectors, so we're all staying at the same hotel. But I'm not exaggerating. Every 8 feet, if I was wearing a long sleeve shirt and you have your wristband to identify you're supposed to be there, if your shirt was covering your wristband, some guy in plain clothes that looked like he's been on human growth hormone for the last 20 years. Like got cut after his first season at the New York Giants and has been pretty much just working out his whole life, comes up to him and goes, oh, can I see your wristband? I mean, everywhere. In the bathroom, there were all these guys doing their best to be kind of out of the way and not obtrusive, but everywhere. I remember thinking, you have this, I'm like, what if I just... I wanted to go up and meet one of these guys, and I thought, I need to walk slowly because I think if I walk a little too fast, I'm going to get shot towards him. I'm going to be tackled and tased. And then if if my wristband isn't present, they're just going to, there was and you can understand these people, A, they have the money, and B, when they see that these horrific events where a guy, the CEO of a publicly traded company who's anonymous is walking down the street in Manhattan and is executed. So I don't know some of it, but anyways, back to the market standpoint, these have got to be great businesses because they're I would imagine, pretty high margin. I would imagine there's a lot of people who are looking for work like this. The people who don't want to round up our farmers and our servers and occasionally a U.S. citizen while wearing a mask would probably rather do private security for a very wealthy person. And by the way, what I would tell anybody, and this is kind of sad, but it's true, go to work for wealthy people. And that is, there's this cartoon that wealthy people are awful, and Monty Burns. I have generally found that really super wealthy people are generous and nice and treat their employees really well. And I just don't buy this notion. I'm like, not only that, if your boss is making $10 million a year, it's not easy for him to pay you $7.25 an hour.
I think that's the more important point. It's like, it would be uncomfortable not to pay you well.
Yeah, let's not even say it's the character thing. It's just that you can't have people in your home organizing your jewels, and picking up your kid from school and then you can't pay your nanny $40,000 a year when you're spending that, when you're spending $100,000 to get to Saint-Tropez. So, and also just generally speaking, I have found, I'll stick by it. Really, really wealthy people get there, not kids who've inherited money. I can't get over what fucking douchebags some of these rich kids are that I meet and how out of touch and non-empathetic and how, I don't know, they're just so tone deaf as to their privilege and to the fact that, you'd be maybe the number 2 salesperson at Subaru of West Hollywood if your father wasn't a fucking billionaire. But they're under the impression that it was their grit and character that got them where they are. Anyways, those people, I generally believe the cartoon is pretty accurate, but the self-made billionaires, quote unquote, have been put in a room of opportunities constantly that they're not in physically because they're good people. And also, I think when you get a little bit older, you get excited about the opportunity to share time and work by giving, by paying people well. But and that's what's so disappointing. Well, I was about to go on my socialist rant, but I'm not going to do it. But generally speaking, we were talking about there's a lot of opportunities probably for these guys, and they're usually guys unless you're a female former Mossad. I want to hire the K-pop demon hunters to be my security guards. Like have a 3D anime following me around. I would like to have, I don't know, who would I like to have as my security guard?
I'd like to have Erling Haaland.
I think Scott Baio or maybe David Hasselhoff. I'd like to get David Hasselhoff like incredibly fucked up and have him just walk around and introduce himself as my security. Or Bette Midler. Bette Midler should be my security. Anyways.
The number of ultra-high net worth individuals surged 21% last year. The top 1% owns half of the market cap of the entire S&P 500. The top 19 households own 2% of all household wealth in America. 50 years ago, it was 0.1%. So their share of the pie has 20x'd in the past 50 years. Compare it to the bottom half of Americans who control roughly the same amount. So you got 19 households versus several hundred million households who control the same amount of money. And then you ask the question, like, what's good with all the crime? Like, why are people shooting each other in the street? Why are we seeing like Hollywood-style heists capturing hundreds of millions of dollars worth of royal jewelry? And I think it's not a stretch to make the connection between what we're seeing with inequality and what we're seeing with crime, and therefore what we're seeing with the demand for executive security and private security. In fact, studies have shown that as the Gini inequality index rises, so too does the number of private security employees per capita. And of course, so too does crime in general. I just want to point you to this stat. There are now more than 1 million privately employed security guards in the US, which is more than the number of high school teachers in America. Compare it to the past 2 decades, the number of security guards in America has doubled. And for context, you might say, well, the population's grown. No, the population has grown only 16% since then. So you've got America's population up 16% and the American security guard population up 100% over the past 2 decades. So it does appear that we are entering into a sort of, post-law society where every man for himself and every man needs to get their own former Mossad agent to protect themselves, to protect their home and protect their jewelry. And to your point about, can this be an investment thesis? Which I believe it can. It's a highly cynical investment thesis, but it's a real one, and that could be something to discuss. We have a few names that we could mention, but let's just get your reaction to that number. More than 1 million security guards in America.
That stat blew my mind. More security guards than teachers. Look, this is the erosion of a society, but it's a continued pattern, and that is very talented, hardworking, and lucky people garner a disproportionate amount of their resources. They incrementally come up with candidates and ideas to lower their tax rates and make it such that they can sequester from the rest of society with private air travel, private infrastructure, private security. They don't need cops. They don't need teachers. They don't need the FAA. They have their own health care. They don't need rural hospital systems can be shut down. It doesn't affect them. These huge cuts to Medicare and Medicaid, they don't affect them because they have their own concierge health care. They have doctors coming to their house. Oh, teachers don't make enough money? I don't care. I've got my teachers in my private school make plenty of money. Oh, we're making cuts to the police force or fire department? That's okay. I've got my own security. So this separates the people with the power from the realities of our society and makes them less invested in our society. And they keep on just voting for and giving money to people who will cut their taxes because the decline in the civility and social services they're immune from. And I'm not proud of this, but I don't know where to put my money right now. I think the markets are overvalued. So what I've been doing, and I've told you this, I've been buying real estate in what I call 0.1% communities. And when I meet with someone to talk about rent, I say, this is simple. This house, I'm ultimately going to sell this house. I don't know if it's going to be 3 years or 10 years or 20 years, but who's it for? It's for a new billionaire. The only thing I'm fairly certain of is in the next 10 to 20 years, the regulatory capture, the income inequality is only going to get worse globally. And as capital becomes more global, they all want to live in the same small number of places, and they are price insensitive when it comes to their home. And so that's the best bet I can find right now, is that, it's why private air travel is surging. And this is the dark side of that. And that is the same pattern emerges. At some point, people realize that if the one man is worth more than the lower 52% of America, the easiest thing to double our wealth, 160 million people, is to take his shit away. And that's a form of revolution. And it keeps happening over and over. But revolutions take on different complexions. And I've said this before, the Me Too movement, Black Lives Matter, the execution of a healthcare CEO, these are all forms of small revolutions. And that's not to say that Black Lives Matter and the Me Too movement didn't have righteous components to them. But effectively, what they weren't going after a sexual harasser managing a taco truck. They weren't going after the racist small business owner. They were going after rich people. So there is this populist anger. Mamdani is probably going to win the mayoral race of a city that has a larger GDP than I think all but 12 or 14 countries, on the notion of essentially income inequality and unaffordability. People are angry. And the income inequality isn't just about the poor versus the very rich. It trickles up. What do I mean by that? There are so many people of your generation living in New York that they play by the rules. They've worked their asses off in high school. They're good people. They got into amazing schools. Their parents borrowed money for them to get through those schools, and they worked hard and they got scholarships. They got out. They got great jobs, and they still can't fucking afford to live in New York or San Francisco. I mean, they still can't afford. When I moved to New York, granted, I had to have 2 roommates, but I could afford to live in New York, making, back then I was working at Morgan Stanley, like 50, 55 grand a year. You have to either be in technology with Meta or Google, working at JP Morgan, or have rich parents who are putting you through New York and San Francisco. So it's not just poor people deciding to break into a jewelry store or committing crime. It's general dissatisfaction among New York voters who are like, fuck, I've played by the rules. I'm making a great living, and I can't live here, but I see this pornographic wealth being shoved in my face 210 times a day. And I see people aggregating the GDP of a Latin American nation who are paying their lowest taxes ever. So this revolution is like happening kind of up and down the income ladder. People are dissatisfied who are making 6 figures right now. Like, okay, I was supposed to live a better life than this. The extraction of so much value and capital is going so much, not to the top 10%, but the top 0.1%, that even if you're in the 90th percentile right now, you're starting to feel pissed off.
That's what the so interesting about Mamdani. People are like, why is this message working in New York? Why are people in Manhattan voting for this? It's like even the people who are making good livings feel that the city is unaffordable. That's why it resonates. It doesn't just resonate for the bottom 50. It resonates for the bottom 90. I think it's an important point. So now we get to the part of the show where we make investment trades based on the collapse of society. So how do you invest in private security? Short answer is it's pretty hard.
Yeah, most of it's private, right?
Exactly. Most of them are privately owned. The biggest one is Allied Universal. They have 26% market share. They're still private, but they said they're considering an IPO maybe next year or the year after because, of course, they're doing very well. There are some publicly traded stocks. There is Brinks. They provide ATM services and armored trucks. There's Securitas, on-site guarding and remote monitoring services. There's ADT, which provides professional home security. These are we haven't done proper diligence on these companies, but so this is not investment advice. Certainly go look into this yourself. But those are a few of the names that are publicly traded if you want to get that exposure. Also, there are a lot of private equity firms that are investing in these kinds of security companies, and some of them are publicly traded. Ares, as an example, they invested in this company called Convergent, and they're sort of the global leader in building security. Apollo is a major investor in ADT. That's one of those private security companies. So there are some ways to get some distant forms of exposure, and there are some ways to get involved in the public markets. But again, not investment advice, and I'm not saying you should go buy these stocks.
So when my mom was diagnosed, when her cancer recurred, she went in for her second mastectomy. And while she was in the hospital, somebody broke into her condo. So obviously it was an inside job, right? That somebody at the hospital knew the names and addresses of people who were undergoing surgery and was providing it to other people to break into their homes knowing that no one would be there, which is pretty depraved, but pretty obvious. And my mom had rented out my room, total cliche. The moment I go to college, she rents out my room because she needed the money, to this lovely PhD student. And she was home and she heard something and opened the door and saw this guy and screamed and closed the door, and the guy ran out of the house. And my mom was totally freaked out. Like, she'd just come home from surgery. The house had been broken into. She was just, as you can imagine, upset, paranoid. And so my answer, being creative and, of course, a protector, was I went across the street to the Johnsons, who were total fucking assholes, and I stole their ADT sign and I planted it in front of her house, that this home is protected by ADT. I'm like, we're fine, because it's clearly the sign that scares people off.
I love that.
Anyways, that's my home security story, Ed.
You're a master of branding from a very young age.
I'd love to see the data, but these home security systems are ineffective, in my view, and play on nothing but fear.
And that might be right. And it could be that a lot of these billionaires who are hiring these 12-person security teams, maybe you don't actually need them, but the fact is they're scared and they're worried.
I know, but what I'm saying is you have an alarm system, maybe that works, fine. But the idea, those commercials were like, we see an intruder, and this nice lady is like, we're deploying the police now. Okay, folks, if you look at the data, hands down, and by the way, people think a good home security is a gun. No, that means you're much more likely to be shot. The moment you get a gun, you're much more likely to be shot, because you don't sit there with your gun cocked waiting for a criminal, right? And generally speaking, criminals aren't there to kill you. They're there to steal your shit, unless you show up with a gun and then they shoot you. The most effective home security system, hands down, is what, Ed?
You just want me to get a dog, man.
It's a dog. 100%. They've done all these surveys. Of people who've been incarcerated for home invasion or theft, and they all say the same thing. We don't go into houses with dogs.
I'm going to get a pet chihuahua.
If you get a chihuahua, get one that is exactly 2.2 pounds and name it Kilo. I think that is the best dog name I've ever heard.
So this is really an investment trade on dogs. How do we go long dogs?
Well, actually, pet supplies companies have been amazing investments. People will start eating cat food themselves before they cut off their cat's cat food. Seriously, it's been a great sector. But I don't know how to invest. I don't know how to invest across this sector. Even like the TSA is all illusion. It's not.
But fear is a powerful thing. Paramount has already made 3 offers to buy it, all of which were rebuffed. Meanwhile, CNBC reported that Netflix could be a potential buyer. Netflix also made headlines of its own. Its third quarter earnings missed expectations, but mainly because of a $619 million tax settlement with Brazil. But beyond that, it was a solid quarter. Revenue rose 17% to $11.5 billion. So, Scott, a lot of news in streaming and in entertainment. Another turn in the Warner Brothers saga. Earlier this year, they announced they were going to split into 2 entities. Then we learned they're fielding interest from Paramount Skydance, aka David Ellison. And now we learn they are getting, quote, unsolicited interest from multiple parties. They say they are open to a sale. And then we're hearing from CNBC that among the interested parties are Netflix, also Comcast. Now, you actually highlighted Warner Brothers as one of your top stock picks for 2024. Here's what you said back in January of 2024.
I think Disney and Warner Brothers Discovery are going to do really well this year. I think they're both going to be put into play. They have become distressed assets. They are now trading at some of their lowest multiples in history. It's not because these guys will do anything that deft or that brilliant. It's because, quite frankly, they've just gotten so cheap, they're going to attract a lot of sharks. They also are single-class shareholder companies, meaning that they're breakable, if you will, that someone can come in and start rattling their cage.
So Warner Brothers has doubled since then, and it now looks like it will be acquired by someone. Your reactions?
So Mark Zuckerberg and Sheryl Sandberg have made more money while doing more damage to young people than any people in history. But from a shareholder perspective, they deserve every penny. With respect to shareholder value, the person who added the least value destroyed a ton of value, took EBITDA, cut EBITDA in half, and like almost fucked up the tax ramifications of their asset, which was Japan, the Japan division of the company, is Marissa Mayer, for coming in and fucking up Yahoo, walked away with $250 million. She's about to be bested by David Zaslav, who has already earned somewhere between $250 and $350 million for getting the stock back to where it was when he came up with this idea to merge the two. And I have no doubt that he is, quite frankly, trying to figure out a way right now to get some crazy golden, exit package from this acquisition. And for basically selling the company for the same price he convinced shareholders to pay for it when this ill-fated dumbass merger was formed several years ago. This is going to happen. They are leaking false information. Comcast is smart. Comcast isn't going to buy this company because the only people who are willing to spend $24 or $26 a share for this thing is the Ellisons, because the kid wants to go to the Academy Awards and wants to spend dad's money to be a media mogul. And the father, just who made $90 billion in one day, probably says, okay, we're going to sell the shitty cable assets and we're going to take Warner and HBO and we're going to AI the shit out of the content side of this, and it'll be really interesting, and we'll see if we can do something. And my son, who's a good kid, gets to go play in traffic. But the idea, they are leaking information that there's multiple suitors here. Bullshit. This thing makes no financial sense. And there's a reason that the only people involved in these companies are all the children of billionaires, because no one else that has to answer to shareholders is willing to show up and pay anything close to this price. So Zaslav is leaking rumors that this is a multiple party bidder. There's one bidder, and his last name is Ellison.
Yes.
It'll end up going, they're trying to play the reluctant bride, so they come up to $24 or $26 a share. They will buy the thing, and right now, all Zaslav is doing is feathering his bed for a deal that he walks away with another $100 to $500 million for basically adding no value. And these are trophy assets. They will. I don't think it's a Machiavellian strategy for the Ellisons to control media. What this will be is an interesting application of AI and potentially colliding Warner Brothers and great content and IP with their U.S. division of TikTok if they get control of that.
I totally agree with. Well, you said two things. One, they're pretending that there are multiple bidders. I 100% agree with that. I think that's definitely right. The second thing you said is that it will happen. It will get sold. I'm not 100% sure.
Why is that? What do you think is going to get in the way of it?
Well, they've rejected the offer 3 times already.
That's a reluctant bride.
Just to play this out. So Warner Brothers says, we're open to a sale, and here are some bidders that may or may not be involved, and it gets leaked to the press, and then now we're on the podcast talking about, maybe Netflix will buy it, maybe Comcast will buy it, etc. You're saying Zaslav wants to sell, he wants to create an illusion of an auction, and that's why this is happening, and Netflix isn't actually interested. I completely agree. What is interesting is the fact that the stock went up 10% on the news. So the market says, oh my gosh, something's happening. They're open to a sale. And what you're saying is they were always open to a sale. They were dying for a sale, Zaslav specifically, and they're kind of pretending as if something has changed and nothing's really changed here, and yet the stock has gone up 10%. So that in and of itself is very interesting, that we're seeing this stock explosion on not really anything at all, or at least something that appears to be kind of manufactured. But it does raise this question. Ellison has come to him and he's given him a few offers. He first offered $19 per share, then $22 per share, then $23.50 per share. Zaslav said no every time. Supposedly, according to Rich Greenfield, who's a great media analyst, he thinks that Zaslav wants $30 per share. Before all of this was happening, Warner Brothers was at 11. So we've gone from 11, we're now looking at $21 per share. And I wonder if he's overplaying his hand here. I wonder if he's getting a little carried away with it. He loves saying no. He goes out and says, no, Comcast really wants us. Netflix really wants us. And I wonder if at some point David Ellison says, you know what, dude, let's quit fucking around. Netflix doesn't want you. They want IP. They don't want your shitty TV networks. Amazon can't buy you. That's going to be a whole antitrust concern. I'm sick of this game.
At the end of the day, the most important job of an investment banker is to create the illusion of multiple bidders. Companies are bought, not sold. And people say, well, I'll decide to sell. No, you don't get to decide when to sell. People get to decide when to buy. And what you need is when you get you have to have a credible inbound opportunity and offer. You give that credible inbound opportunity a chance to take you off the market at what you would call a rich, even irrational price. Otherwise, you're going to investigate other suitors. Fine, they don't want to give you an irrational price up front. You get it. You get a first strike opportunity. Sometimes they do, sometimes they don't. When I sold my first company to Dentsu, I said, here's a price. It's above market, but if you take it, we won't talk to anybody else and it's yours. They did that. Great. With L2, we had a credible inbound opportunity. I countered at a much higher price. They said, no, we can't do that. I said, fine, but just FYI, we're going to do a market check. Go out with a book, data room, have people signed LOIs, 7 players signed LOIs. It's a great business. We got 3 term sheets, including the existing inbound offer. One was from Gartner, one was from Accenture, and one was from Corporate Executive Board. And I wake up and Accenture basically said, this is so exciting. You're going to love this, Scott. We do business with 400 of the 500 global, the Fortune 500 globally. We want to take your thought leadership and introduce you to everyone from, De Beers in South Africa to Samsung. And they were acting as if, what a thrill for you as a professor. You're going to get to molest the globe and share your thought leadership with CEOs all over the world. And I thought, I can't imagine anything I would less rather do than get on a plane again for the rest of my life and be in shitty corporate hotels, again, renting my brain to old white guys or old brown guys around the world. I'm just done. I'm fucking done. And they made it sound like I would love that. And I'm like, so I went back to them and I said, look, this isn't for me. And then I wake up on fucking Monday morning and there's an announcement that Gartner has acquired Corporate Executive Board. So in about 72 hours, I go from 3 suitors to 1. And I remember that thinking that I have to give them the impression that there are multiple suitors here. Otherwise, I'm fucked. And basically, I tried to talk there's only 2 things you have to remember in any negotiation. 1, don't let emotion get involved. Don't make it about win-lose. You're all good people. And if there's not a fit, there's not a fit. But don't think of it as a win-lose. 2, always show a credible willingness to walk away. Always show a credible willingness to walk away. And the way you can do that, or go with another partner, is the illusion of multiple bidders. Or, they get the sense, the tone of your voice, that you're willing to walk. And the only way Gartner closed was I walked. They kept coming back with additional terms and conditions. And at one point I said, I need you to let me out of this exclusive because I'm done. I'm kind of done going back and forth. And then the CEO called me and said, okay, let's close the deal. It's very rare that a deal closes without one party walking away at some point, because basically you're sharks bumping each other to see, to kind of bump each other and see if you respond. These guys, in my view, and I don't know the situation, nobody can rationalize to their public shareholders, whether it's Ted Sarandos or the Armstrongs at Comcast, can get on an earnings call and justify anything close to this. So Zaslav is, in my opinion, and his bankers are playing a total game. It was at $11. If all of a sudden Ellison announced they were dropping out, I think this thing goes down 30%. and maybe more. And within 3 months, it's back to 11. It's maybe not back to 11 because it's still in play.
Kind of. I mean, we're saying that there's one bidder, he's pretending that he's got 5. And if suddenly people start to connect the dots and say, actually, hold on, this doesn't work, this doesn't work, this doesn't work, there's only one bidder, then suddenly that transforms the transaction in a huge way. And suddenly David Ellison has the leverage.
If you look at Warner Brothers stock, right? In April of 25, in April of this year, I mean, 8 months ago, it was at $8 a share, right? In October of 24, it was at $7.40. By the way, the business was better then. This business gets worse every month because they're in the business of ad-supported cable. So when the business was better at $7 a share, the only thing that's changed here is there's a kid with a preloaded credit card of $40 billion that showed up.
And Zaslav is saying it's not good enough. He's saying it's not good enough at 23.
That's the whole point of negotiation. It's never good enough. They're going to play the reluctant bride and pretend that there's other idiots out there willing to pay $24 a share, 26, 30. No, there aren't. And if Ellison tomorrow announces we're out, we're moving on, this thing is down 30%, and most likely I would bet it's down to 11 or 12 bucks again in 3 to 6 months. So they're all and good for them. That's their job. He's trying to get the maximum value for his shareholders. It's a trophy asset. There are some assets here that are non-replicable. I get it. But be clear, there's only one irrational buyer right now, and his last name is Ellison.
All right, let's take a look at the week ahead. We'll see earnings from big tech with Amazon, Apple, Google, Meta, and Microsoft all reporting. We'll also hear the Federal Reserve's October interest rate decision. Traders are betting on a quarter-point cut with near 100% certainty. Scott, any predictions?
Well, we talked about it earlier. I think that Xi is going to come for the jugular, and you're going to see a flurry of open-weight LLMs. The old navy of AI is about to come from the East, and I think it's going to have could have a serious impact on the companies that are totally dependent upon AI projections, which could have a big impact on the market. I think that China is... What was it that Tyrion Lannister said about, I forget that character's name. He said, this is a very serious man. I think Xi is very serious, and I think they are being very strategic. I think it's no accident they went after the soybeans in red states. And I think that if I was advising Xi, this is exactly what I'd do. Flood the market with cheap AI LLMs that are irresistible to use. And these companies don't live up to the already irrational expectations. And all of a sudden, GDP growth in the economy in the U.S. goes into recession right away. And this guy loses all of his cloud cover for these bullshit, sclerotic, irrational geopolitical decisions around tariffs. And I think that's exactly what they're going to do. And he has the power to say to these companies, maybe it's not good for shareholder value, but you're going to come up with amazing